Hi, I'm Grant Abbott, I'm from SMSF Strategies, and today we're looking at the most strategic SMSF estate planning tool that's available, and that is the reversionary pension. So what is the reversionary pension? Well, in simple terms, when we write the pension documentation, and this can all be available from SMSF Strategies, or certainly your local accountant or financial planner or SMSF Strategies advisor has the ability to do this if they know what they're doing, of course. We write a pension documentation, so the pension starts out whether it's a transitional retirement income stream, whether it's account-based pension or any pension for that matter. It starts off in one member's account. On the death of that member, or alternatively, in the event of something happening, what can happen is that pension automatically reverts or switches over or transfers to the next person. For example, we could have a mum and dad. A pension might go from dad, and when dad dies it goes to mum. And here's a nice one. When mum dies, we can have a position that that income stream, or whatever the accounts balance is left at the time that mum dies, is that it's split proportionally amongst all the dependent grandchildren that were alive when dad died. So it could spin out like a multitude of pensions. Of course, we might just decide to have like 2 or 3 pensions at that point in time for grandchildren. Choose which ones are our favourites. Who knows? Doesn't make any difference. But the concept is there. It can go dad, mum, grandchildren, or it could go dad, mum to children. Unfortunately, if children are over the age of 25, they can only get a lump sum, but it can still be a reversionary lump sum. So what happens, it goes from one account to another account. It simply goes from one to another. Your accountant can easily do that transfer. And there's a number of important benefits in having a reversionary pension. First off is we don't necessarily need to do what we call an SMSF will. We don't even have to worry about it inside our will, because in our pension documentation we've built an automatic will. We've worked out what we want to do, how we transfer these benefits. To my way of thinking, there's also some strategic insights from a tax perspective. You see, the Commissioner came out many years ago and said that on your death, if you're the only pension member, you've got a pension inside that fund, and you die, effectively all your assets that are being used inside that pension side, which for many of us should understand is tax-free inside that fund. I'm not talking about taxable benefits coming out, I'm talking about tax-free benefits inside the fund. Effectively, that pension ceases, those assets go over to the accumulation side, and then if they're used to pay our benefits to our dependents or our legal estate, they'll be taxed, or capital gains tax will be levied at 10% on those. Not a good thing. Easier way to do it is just simply set up a reversionary pension. Absolutely crucial to have these for all pensions, absolutely all pensions. Even if it goes to dad, mum, and that's as far as it goes, at least it gives mum some time to wind down those assets and get rid of those assets and pay them out in specie over a period of time. And decide what to do with them without having this tax liability. Your advisor or your accountant must have been in a position of telling you that already. Must have a reversionary pension. The other benefit is if that I'm over 60 or dad's over 60 or mum's over 60, if the original recipient of that pension was over age 60, you're receiving it tax-free, it doesn't matter where it goes down the line, where it goes dad, mum, grandkids, effectively in those instances, when it's received by those recipients, it's always going to be tax-free. Can you imagine setting up a reversionary pension for someone aged 60 now and having that pension run for not only dad's life, mum's life, but grandkids? It could be like a 60-year pension, it could be a 70-year pension. There's some great strategic opportunities using these reversionary pensions. Final play is that we have to look at is how to set these up. When we're just doing simple pensions going from dad to mum or mum to dad, the wording's not that difficult. Again, the SMSF Strategies Advisor Pension Kit can easily achieve this for all advisors out there. You can do a multitude, a plethora of documents for your clients, not only just reversionaries, but rollbacks, commutations, account-based pensions, transition retirement income streams. But all of these basically do have a note in them that they are reversionary. Do you want to choose a reversionary? If it goes down to grandchildren, we then have to get a bit more smart about the sort of wording that we play. How do we want to play it out? And of course, SMSF Strategies, or myself, is here to help advise all advisors on how a reversionary pension can be established for multi-generations. Anyway, it's Grant Abbott from SMSF Strategies signing off. We've been talking about reversionary pensions.